you are in for a treat. If you're coming back after watching part 1, you already know. If for whatever reason you missed part 1, please know that today's episode is part 2 of a 2-part series. I have with me the founder and CEO of Pylon Lending, Trent Hedge. Trent himself, prodigy. Trent is a Silicon Valley VC-funded founder, but his company, Pylon Lending, is going to reshape everything we've ever known about mortgage. That's production. That is delivering the loan in the secondary market. That is everything from A to Z, soup to nuts. And it's going to happen whether you like it or not. So you might as well like it. You might as well tune in. And you might as well get caught up on the future of mortgage lending with Pylon Lending. Check this out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to Loan Officer Podcast with me, Dustin Owen, and back for part 2 of our 2-part series. He is Pylon Lending's founder and CEO. As I said before, he once crashed on Sam Altman's couch. He is VC backed. He's the darling of Silicon Valley, or at least you're the darling in my eyes. He is the one, the only Trent Hedge with Pylon Lending. Trent, welcome back to Loan Officer Podcast.
Thanks for having me back, man.
So we're going to dive right into this. To keep the people at home who are tuned in on YouTube right now or listening on Spotify or Apple Podcasts, which, by the way, if you're tuned in on Spotify or Apple, do us a favor, give us a 5-star review. That is how you tell the algorithm that this content doesn't suck and that more people should tune in. If you haven't watched us yet on YouTube, know this, you're missing out. YouTube is a great place to watch all 600 plus episodes of the Loan Officer Podcast, but we have over 400 additional pieces of content. Things like Mortgage School, Coach's Corner, Talk Mortgage to Me, The DO Show. You're missing out on all of that if you haven't gone to our YouTube channel and clicked subscribe. So on the last episode, Trent and I were getting to know Trent, the guy that basically graduated high school after being a serial entrepreneur, going back to like middle school. So he was already 6+ years of being a serial entrepreneur, graduates high school, moves to Silicon Valley, and automatically just starts coding, vibing, hanging out with other influential up-and-coming rock stars, solving all of the world's problems, one code, one app, one piece of software at a time. Ultimately, is a founder of a company that is trying to disrupt and make custom home building easier. And it was through that process he learned how discombobulated, confusing, red tape laced the mortgage industry is, and decided at that standpoint, this was going back 4 years ago, decides something has to be done about this. And that something is his company, Pylon Lending. And today I'm going to ask Trent to explain to us what all has transpired since 2022 when they originally raised their $8.5 million. What has transpired now that we're in 2026 and that funding has gone up to close to $45 million? And where does he see Pylon Lending going come 2030? And more importantly, we as mortgage lenders, loan originators, even real estate agents, home buyers, and homeowners, what do we need to know about the way things used to be done and the way things are going to be done? So I'm going to start here, Trent. The year is 2022. And you are founding Pylon Lending. First, inquiring minds want to know, how did you come up with the name? Are you a big football guy and you thought of like you're trying to cross into the touchdown zone, you have to put the football over the pylon?
No, although I like that metaphor. Power lines are held up by pylons, the big metal structures.
Yeah.
So as an infrastructure company, I thought it was only fitting.
I like that. Okay, so it's Pylon Lending. The year is 2022. And in the very beginning, what were you setting out to do? Y'all, something big is happening at Lower Mortgage. And if you're paying attention to this industry, you've probably noticed. In just the last month alone, Lower has added some serious horsepower. We're talking top producers representing over $350 million in volume. These aren't rookies kicking tires. These are heavy hitters who've done their homework and made the move. That should tell you something. On top of that, Lower just acquired Movoto, a top 5 real estate portal with over 150 visitors just last year. Before that, they brought in Neat Labs, and now they're launching Lower OS, a next-gen mortgage platform that's cutting loan delivery times down to 10 days. This isn't a company standing still. Lower doubled their volume last year, and they're projecting another 40 to 50% growth this year. The best in the business are taking notice, and they're voting with their feet. Here's the reality. The companies that are going to win in this market are the ones investing in technology, building real infrastructure, and competing at scale. Lower is doing all of that. They're going head to head with the rockets of the world, and they're built for originators, not against them. If you're a producer who wants to be a part of something that's actually going somewhere, not just surviving, but growing, this is the moment. Lower mortgage, the momentum is real.
So we were setting out to make it easier to build and operate a mortgage business. That means that rather than having to build the, again, factory of manual labor to manufacture loans, building a capital markets apparatus to efficiently sell loans, that you could just do all of those things through our platform. As we like to say, from Main Street to Wall Street and kind of everything that exists in between. So we ended up spending about 3 years just building software. We had very little volume, very little revenue. That was intentional. That was by design. And the reason being is we wanted to go sort of rethink the entire stack from the ground up. So if you obviously, what tends to happen, what has happened in the past, is that people set out in the mortgage industry with this idea of building software. You've seen this with a lot of the tech-enabled lenders. And then they end up just hiring a bunch of people and throw people at solving the problem. So our early sort of insight was that if we were to solve this problem, we would have to put up with multiple years of delayed gratification. So that was the pitch. Can you imagine that? You're trying to recruit people and you're like, you're going to have to eat glass for 3 years while everyone's asking you how much volume you're doing and you say none.
Yeah. I mean, even raising money. I mean, right. You're going to your backer saying, hey, I need $8.5 million. But by the way, we're not going to be pushing the revenue anywhere close to the first 30 months.
Yeah.
Right. 36 months possibly, right?
Yeah,
Before you're pushing revenue. And you all were building software at a time where I'm guessing, is it easier to build software today in 2026 than it was in 2022 due to the technological advancements?
Oh, there's so much more that's possible today.
Yeah. Yeah. It's just crazy, right? I mean, even you all who are ground floor to what you can do with whether it's Claude or one of the other many, I don't know what you call them, softwares, apps, technologies. But you all were coding in 2022, weren't really pushing a product out to the market. Coding in 2023, not really pushing a product out to the market. 2024, is that when you started pushing a product out to the market?
2025, really.
2025. So
actually, late 2024, early 2025.
So you're about 18 months into this, right? Ish. 18 months. We're recording this end of May, beginning of June. It's 2026 if we want to put a timestamp on it. And all you were trying to do is create rails or infrastructure that other mortgage companies could follow. So you could take something from Main Street to Wall Street in a more efficient, effective, cost-effective manner.
Yeah.
Because your research essentially showed you this, and correct me if I'm wrong here. You look at mortgages very similar to what I do, which is it's a factory, right? Like I tell mortgage originators, I coach them for a living. And I tell them all the time that Henry Ford did us all an amazing service when he created the assembly line. And it's any business that you run has to run assembly line, right? It's why my team and I use Asana as a project board. Other people use Slack. It's because we're trying to manage project and get something from A to Z as smoothly, as predictably, and as cost effective as possible. But when you look at an assembly line, you see something that is inefficient. And that's the number of bodies in each department that it takes to move that widget from point A to point Z.
It's locally efficient, meaning if I were building a mortgage business 10 or 20 years ago, I would have also built a really efficient assembly line. The difference is that the technology has changed now, so you don't need to build an assembly line. And so, just like I actually think that this is sort of the industrial revolution moment for the mortgage industry, where people always complain that the mortgage industry hasn't changed all that much for many decades. And they were sold, a lot of software, didn't really live up to the hype. I think those are all very real and fair things, because all of those tools were sold into the factories, and those factories were made slightly more efficient. First, it was like, we're going to sell you a new loan origination system or point of sale pricing engine or CRM, whatever. And then
back in the day, I mean, DU and LPA coming out had the entire industry. I'm young enough that wasn't my world. My world, I've only known having AUS.
That was definitely before my time.
Yeah, it was way before your time. But even in my time, I mean, I got in the industry in 2004 and I was 25 years old, right? And we all had AUS. But there are people that came before me that they were being told that AUS was going to put all these people out of work. But you basically say to that, well, it didn't. Right, it didn't put people out of work. It just changed the factory a little bit.
We can talk about this more, but don't believe the boogeyman. Yeah, people always want to put stories out about how software will take people's jobs and the world is going to melt down. Usually, when people say things like that, they have interests that they're protecting. So you should look at what those interests are. In the case of mortgage companies, there are companies that have built their entire business around how can I run the most efficient factory. They've gotten so good at how do I process, underwrite, close a loan, that it's a competitive advantage. And there are economies of scale in running these factories. So the market has, on a exponential basis, rewarded the largest factories, the people who can amass the biggest factory. So I think we're definitely in this moment where that's changing dramatically. And some people are uncomfortable with it. Some people are more comfortable. To your point earlier, it's going to happen whether you like it or not. So you should just be a part of it.
Well, you just touched Pandora's box. I'm going to open it up, right? Let's just rip off the Band-Aid and get right into it. What do you say to that loan originator who is sitting in their home, whether it's in Scranton, PA, or it's Spokane, Washington, Albuquerque, New Mexico, like you name that city in America, when they're like, it's going to take my job? What do you say to the loan officers, that mortgage broker, that producing branch manager first? Let's start there.
So I actually think it's important to have an honest discussion about this. Like, I could just...
You don't want to lie to them?
No.
Okay. I like that.
Yeah.
Those Midwestern values are shining through.
So, I do think it'll completely change how people do their work. We're already seeing that for sure at Pylon. It will, like, from what we can see, it will take a lot of the mortgage manufacturing jobs and change them into customer-facing roles. Meaning, if you take all of the, let's say, processing, underwriting, closing, post-closing, all of the behind-the-curtain work.
Yeah, because in my assessment, and I've said this before I knew you, before Pylon, before 2020.
Yep.
And luckily, or maybe it was 2020, because that's when I started podcasting. I always joke. The good thing about me saying I said that is I actually have record of it. We can go back and play it on YouTube. Yep. But I've been telling people since 2020 that if you're in those roles and you don't give good phone and you're not great at customer service, I'm in fear that you won't have a role in this industry moving forward. And my hopes for many of them in the non-sales, non-advisory, my hope for many of them is they were close to retirement. Like, maybe you're close to retirement. Maybe you don't need to learn a new skill set. But I'm curious because there's two ways. There's the originator that I want you to speak to, and there is the processor, closer, post-closer, funder that I'd like for you to speak to as well.
Well, I'm coming from the other angle because they end up being one and the same, I think.
Ooh,
so
okay.
If you dramatically reduce the cost structure for manufacturing a loan, you take it from all these hours spent staring and comparing documents to the cost of running software servers. Those roles do change, but so does the cost basis for getting a mortgage. I can actually get a mortgage at a much lower rate now. And so what I think will end up happening is that those folks in those back office roles will transition to the front office. And we've already seen that happen. So we have people who are applying for roles at Pylon today who were previously processors and underwriters, but actually want to be on the front lines with our customers, helping them to adopt the software, helping them to resolve borrower issues. And the loan officers now have superpowers that they've never had before. So we just had a customer, for example, who in less than 90 days, they run sort of at scale online mortgage broker. They doubled the amount of revenue that they were doing per loan, and they doubled the number of loans they were doing. So they quadrupled their business and added 0 headcount.
Now that's awesome.
Yeah.
Right. Like if that hasn't got your attention, it should. Right now, your ears should perk up. You should be pulling over the side of the road, slowing down, maybe taking us off 1.5 speed. Let's dial it back to 1.0 speed and take notes, because I have a feeling we're going to start dropping some serious knowledge and using data to back it up. So you have people that are currently used to being back of the house saying, look, I want to be a part of this technological advancement. Let me go work for a company like Pylon, not because I'm going to process and close loans, but I'm going to work in account management, and I'm going to be the face and the voice that people hear, meaning your clients are going to hear when they need help navigating a certain situation. They're talking to an ex-mortgage professional who now works for a tech company who happens to be out there to shape the future of mortgage lending.
Yeah, well, and the same thing is happening with our customers. So they might have had lots of people who are helping to process and close loans before, who they're like, hey, because of Pylon, our volume just multiplied overnight. We need these people on the front lines picking up the phones, dealing with the customers. I think that's a great problem to have.
Yeah, because you're not helping these for this, in this case, it was a consumer direct mortgage brokerage, a large national mortgage brokerage. You weren't helping them generate any more leads. Right, they're gonna do that on their own, whether it's their own proprietary programmatic marketing or whether they're purchasing leads that were generated through someone else's programmatic marketing. That's not really what you all do, but what you help them do is you help them get to those files sooner, decision those files sooner, price out those loans at a rate that is unlike what they're seeing elsewhere in the market. So that means they're decisioning loans quicker, but they're also earning and winning more business because they maybe have gone from being not the price leader to the price leader, and they haven't missed out on the ability to actually get that loan through the assembly line in an efficient manner.
Yeah, our infrastructure and rails deliver a unfair competitive advantage to our customers, and it's on them to go make loans. So we don't interact directly with consumers. We don't sell other financial products. We don't directly interface with borrowers, but our customers are able to use our infrastructure to make a lot more loans.
Yeah. And I think it's good to know, and I asked this question before we clicked record, my question was, is Pylon a lender or a tech company?
I will unequivocally say a tech company.
It's a tech company. Like, you all don't have any interest in running your own programmatic marketing, having home buyers and homeowners call you for financing, and having your team originate and fund those loans using your infrastructure.
Yeah. The reason that we are a licensed lender on paper is so we can drive the capital market efficiencies that you're seeing in these rates.
Yeah.
So it's mainly sort of at the infrastructure and capital markets layer rather than we have loan officers. If you look, you could go to the NMLS, you'll see that we have one loan officer.
Okay.
And that's just because you have to get a license.
Nice. And that one loan officer will probably do 4 loans a year. They will all be employee loans, would be my guess.
That's correct.
Yeah. And so as a technology company, your goal is to work with all lenders?
Yeah.
Would all lenders be too big of a goal for you?
No. I think anyone originating a mortgage in the United States, at least for now, would be a customer of Pylon. Obviously, we have different segments of the market that we're focused on in phases, but any originator, whether you're a lender or a broker, could come on the platform today and make mortgages.
Yeah, and for anyone who's dense like me, we had an awesome opportunity. We had lunch with Trent and Brett and Mark. My son Jackson was along. Your chief of staff was with us. What's his name again?
TG.
TG was with us. Had an amazing lunch. We had Georgian food. Not like fried chicken and collard greens Georgian food, like not the state, but the country.
Welcome to Palo Alto.
Welcome. Hey, it was amazing. But something that they did a good job of explaining to me that I want to explain to the audience is you and your team both gave me 2 analogies that really set with me, which is this. You don't make payments to Visa. You don't make payments to MasterCard. You don't even make payments. Do you make payments to American Express? I should know this. I use an American Express.
I mean, to pay off your credit card at the end of the month.
Yeah, I guess you do. But you're making your payment to a bank that uses Chase or uses Visa or MasterCard. right? And you all very much like if they were the first that say, hey, we're going to create a rail system and infrastructure for banks to use in order to offer personal credit to be used in retail establishments, Pylon, and maybe it's too loose of a comparison, but to me that made sense. Like, oh, Pylon's trying to create the infrastructure of the rail system that banks, lenders, and credit unions can use, or maybe even other fintech companies who want to get into mortgage, whether it's a Robinhood or
we are an engineering company that moves mortgages, that moves money, and therefore we would love it to be in the background at all times. You'll never see us interacting directly with consumers. We don't buy basketball teams. We don't fly people out to go to events and give them basis points. We don't do all of the things that I think the mortgage industry has become accustomed to. Our goal is explicitly to build this infrastructure that delivers a competitive advantage, and then you decide what to do with all of the extra margin that we've just generated as a result of vertically integrating the entire ecosystem.
And that extra margin, as I've understood it, is on the low end 60 basis points, and the high end 160 basis points. Is that what you're seeing, or the feedback you're getting from your current clients?
I would say roughly like 100 to 200.
Oh, wow.
But really, it just depends on the segment of the market and what they have available to them.
Yeah, and currently, if you're trying to partner with Pylon, in a way, you may not want to hear what I'm going to share with you, but they don't have a interest issue, right? Like you don't have to spend money right now on marketing and advertising to get more people to be intrigued with being your client or partner, right?
Yeah, definitely fortunate to be in a position where a lot of customers want to come on board. It's probably why you don't hear us doing a lot of conferences and interviews like this. Glad that you were able to make it out here. But
make it out. You're the only person, Trent, in 6 years that I paid and flew my happy ass out 3,500 miles to record content.
Yeah. Well, we appreciate it.
Right? There's a first time for everything. No, I appreciate it. I'll be 100% transparent, honest. Don't know how not to be. Like, I want a relationship with Pylon. Like, I wanted to get to know you guys better. Like, yes, it helps that it's San Francisco. It helps that, my son's off of school and I got to bring him with me and we're going to go to a Giants game. But no, 650 episodes, normally it's, hey, if you want to come on the show, we record in Orlando, Florida, typically on Tuesdays. Let me know next time you're going to be in town.
I hope your son actually goes home and becomes what's called a token maxer, where you are maximizing the number of AI tokens used in, let's say, Claude Code, and you get a big bill as a result of being Palo Alto pilled.
TLOP Unite is not your typical mortgage event. This is the first ever TLOP cruise experience built exclusively for originators. And for 4 days, it's not about the speakers, it's about you. We're talking breakout strategy sessions, real conversations, curated events, and uninterrupted access to a community that helps you grow. If you're serious about taking your career to the next level, this is where you need to be. Space is limited and the price is right. So click the link now and learn more.
I would love nothing more to have to upgrade his Claude from the $200 a year to the $2,000 a year if it means he is maxing out on his tokens.
Love it.
Right? I have 2 children. They're 18 and they're 21. And this has been interesting. It was like asking them to brush their teeth or clean their room when I've been at the dinner table, like jamming AI down their throat. And you would think me, the boomer, old hat 47-year-old, would be the one that you're having to like jam that down their throat. And I'm looking at both my kids, and both of them were like wanting to kind of like give me resistance, right? So I was able to get my son turn that corner, so I'm good. But now I have the 18-year-old, and she's my crafty one. She's my creative one. Like, she's actually the more entrepreneurial of the two. And right now I'm dealing with her. She's like, they're going to be my ideas, not some computers. It's going to be this. And I'm like, babe, I'm not asking it for not to be your ideas. I just want your ideas to be able to be like, at 10x in a matter of like seconds instead of being 2x in a matter of years. But no, you don't have to worry about that with Jackson. He's 100% going to go home. What did you call it? Tokenized?
Token maxing.
Token maxing. He will be token maxing. And honestly, my hope for him is one day, whatever football team he's working for, they'll pick up that $2,000 a year bill, and it'll stop going on my Amex. But no, so I was trying to like give the people kind of get out of that rabbit hole real quick. Thanks for taking me down it though. That was fun. Get out of that rabbit hole for a second. I was trying to give them like an analogy of how I better understood Pylon. The other way was this. So we were out in San Fran for 2 days, and we had these in Orlando, but only in the touristy areas. And in certain parts of the country, maybe you've seen these Waymos, right? You know what they are because you live here. But Waymo, for those that don't know, it's a self-driving car. They also have them in Arizona because I've seen them there. But we actually got to get in one. And when we were at lunch, your head of, what's Brett? Marketing, business development?
Yeah, we call it go-to-market.
Yeah, so Brett's one of the key members here at Pylon, and he was my first connection. But Brett explained to me Pylon using a Waymo analogy because Brett's been living in San Francisco since 2010. So he remembers when in the very beginning, Waymo was still that weird-looking Jaguar with all the fancy electronics on it, but it had a driver in it, and the driver was driving.
Yep.
And then later, it was still that same fancy car with all the gadgets and gizmos. The driver was sitting in the driver's seat, but it wasn't driving. And then it was, okay, we're going to take the driver out, but only on certain routes. Well, now, I mean, I was in San Francisco yesterday. We were in a Waymo in 5 o'clock traffic from the Golden Gate Bridge all the way back to the hotel, stopping at Lombard Street to take a look at it. And there was no driver. And there were very little restrictions around it. I'm guessing your journey at Pylon is that. Right now, you're funding just conventional loans? Is that correct?
Conventional and jumbo.
So you're doing conventional and jumbo. When did you add jumbo to the mix?
Last year.
Last year. But you've been doing conventional now for a year and a half?
Ish.
Ish.
Not even a year and a half. We started just starting to have customer conversations a year and a half ago. We started really making loans last year. And yeah, we started with conventional and jumbo. And now we're also starting to layer on other products.
Okay. And then how soon before you're like, okay, we're conventional, we're jumbo, we're non-QM, we're FHA and VA?
Oh, that'll be a while.
Like what's a while in Silicon Valley? Is it 2 months or 2 years? I'm not going to hold you to it.
Somewhere in between.
Somewhere in between.
Yeah.
I like that. Somewhere between 2 months and 2 years, you'll be able to basically
keep
say
you guessing.
we're full scale, right? Things that you may miss out on. Construction lending, state down payment assistance loans.
Yeah, just to give you a sense, that customer I was mentioning earlier who made who quadrupled their business, we went from 0% of their business to 81% of their business in that same time period. So I would say we have very good product coverage relative to what the market demands, but we're not everything to everybody. It's really hard to build full automation when you're trying to do that.
Yeah, and right now, as I know it, you're having your most success, like your ideal avatar right now is someone who is either delivering loans into the TPO space, so you're a broker, or you're doing some kind of a non-delegated correspondent lending with other aggregators.
Yeah, we also have some IMBs who are delegated. We have some Fortune 500 companies who are building mortgage businesses for the first time. So actually have a pretty diverse range of customers. The mortgage brokers and non-delegated lenders are definitely very excited about the product. And I think part of that is just that we're not having to think about all the software solutions that you are having to replace as a result of Pylon, or how you have to change your internal processing and underwriting and closing. You're sort of just swapping out your wholesale lender for Pylon. You're changing your wholesale lender out for software.
Yeah.
And that's a much easier thing to do if that's how you've been used to operating.
But if I'm utilizing Pylon, I'm assuming I'm not using Arrive, Calix, Blue Sage, or Encompass as my LOS. I'm having to put it through your system, correct?
Yeah. We do have customers who still use those systems and are migrating onto Pylon, or put a percentage of their volume through Pylon and then still run their traditional process as they're onboarding. But these days, a lot of customers are kind of just saying, hey, why do I need any of this software? I could just as easily be running on Pylon. And in fact, I get a lot more efficiencies by doing so. Fun fact, we actually had a mortgage broker the other day using Claude Code build their own version of an LOS, though completely headless, with zero engineering resources on top of our APIs. So they replaced all of their software, and all of it is custom built just for their business, designed exactly how their loan officers want to operate. And they did that, all on top of Pylon.
You know who would do that? I'm going to give a shout out to my buddy Mike Fitzpatrick. Mike Fitzpatrick, Myrtle Beach, South Carolina. He would do something like that. Like, that is right up his alley.
Yeah.
Now, I don't know if his employer would allow him, right? His current employer may have their own, operating systems, and you have to use Optimal Blue to price it out. You have to use Simple Nexus for your POS. You have to use Encompass for your LOS. And that's where I would guess right now would probably be y'all's biggest hurdle to overcome is how do you get some of these lenders who are like stuck in their ways of this is my POS, this is my LOS. And because you're basically saying, yeah, but when you deliver loans to us, it's going to be on the Pylon rails using the Pylon software, which isn't going to API or integrate with Encompass, I'm not assuming, right?
No.
Okay. Let me ask you this one. So,
to be clear,
yeah,
you could build that integration if you want, but it's like taking all the autonomous technology that sits on top of the Waymo and strapping it onto a 1950s Ford, right?
It's just not going to work.
It just doesn't make a lot of sense.
Okay, I like that analogy. But would I ever use Pylon but deliver that loan to one of my other aggregators, whether it's a Planet Home Lending, a New Res, a Mero Home, etc.? Or you're like, no, again, Dustin, you're missing the point. If you're going to use Pylon, it's the software, but it's also the delivery, and we're delivering that loan directly to Wall Street for you. That's how you're getting this 100 to 200 basis point pickup in pricing.
Yeah. You would be, theoretically, you could use our software and you could try to take that loan and, move it elsewhere. You license our platform and you own your own data, so you're free to do with it whatever you want.
Okay.
It just happens to be that you're going to get the best price and bid basically 100% of the time. So that doesn't really happen.
Gotcha.
Because again, like structurally, this is different. We're taking the loans to another part of the ecosystem that historically these originators have not had access to.
Yeah. I want to give a shout out to my dude, Jonathan Haddad over at AIM. Right. So I appreciate Jonathan for so many reasons, but he's one of those younger leaders. He's not afraid to be confrontational. He tends to be well-read and fair. And he posted about Pylon, and I loved it because I remember one of my mentors, actually my uncle, and he once told me he ran used car lots in Oklahoma and in Florida. And he's the one, he had a bunch of isms, right? Ex drill sergeant in the Army, just imagine, and a car guy, right? So, but some of his isms are still true, right? He's like, you'll never make X amount of dollars per year only working 40 hours a week. Right, like he was like, you got to put in the work. You got to be willing to take risks. You got to take on something of either 100% commission or ownership equity. But one of the things he said is there's no such thing as bad press. He said, Dustin, I'd have the local news station at my car lot wanting to do a feature about how one of my sales reps took advantage of this single mom with 3 kids. He's like, but I would sell 10 more cars the next day because there's no such thing as bad press. So on that same note, I love Jonathan doing what he did because he put y'all in front of the people who follow him, which are large people because of the AIM platform. And one of the questions I wanted to ask you about that came of that particular post that Jonathan did, it was the data. Is there any part of the consumer data that you all want or need to have access to, or what does that relationship look like with your clients?
No.
And just a basic answer, nothing that would need us to require like disclosures, NDAs, or attorneys to be present.
No. It's totally fine. I'm open book about this stuff. You probably see me making a slight face because, to your point, there's a lot of bullshit, if you will, in mortgage marketing. Not just mortgages.
A lot.
Marketing.
That may be an understatement.
Yeah. Everyone has the next great thing, and most of it doesn't actually mean anything. So I encourage people to try to criticize us, to try to look into what we're doing. And I think in most cases, you'll find, hopefully all cases, that you actually just want to be a part of what we're doing. And by the way, for Jonathan, would love to have him put his first loan through Pylon and experience it for himself.
Oh, there we go.
I'd be happy to work with him on that.
Okay. I can make that happen. I can send a text right now and we can get the three of us on a text chain, and I'll back out and let y'all do your thing.
Let's do it.
Okay.
No, so you license the platform, and people talk about, you have to pay to send Pylon loans. You're not paying to send Pylon loans. You're paying for the software, just like you pay many software vendors in your business today. It's no different. We just happen to do everything, and so you might sort of conflate those two.
And by the way, you do have to pay, but as I stated earlier, maybe I didn't say it this matter-of-factly, they have a line out the door, right? Like, from a business standpoint, you all can charge, because it's a great way for you to have some kind of a barrier of entry to make sure that you are only working with the serious of the serious and the best of the best. But I like your explanation better, which is like, guys, quit looking at us as a lender only, because we are a software company first that lets you deliver loans. Therefore, you have to pay our software fee, but in return, you're going to get this monetary financial pickup. And I promise you the fee will be nominal.
Would you pay a nominal fee to quadruple your business?
Of course I would. Like,
okay.
Duh, right?
Yeah.
Okay. What do you say?
Go
ahead.
Let's just address this. So you license the platform. You own your data. So, for example, if a wholesale lender has a platform and you can put a loan through, but then ultimately you export that loan, you've just given that wholesale lender your data. Now, they might have a retail origination arm. They may choose to use that data or not to go capture that borrower themselves. We as Pylon do not have a retail origination arm. We do not have in-house a servicing book. We're recapturing. You license the platform, you own the data, you do whatever you want with it. And so I would almost say that we're the extreme opposite end of this, potential accusation. And then the other thing is, it says, I think there was some comment around services, cross-selling other services. We have, you can look it up. We have one business entity, which is a mortgage entity. We don't have an insurance business. We don't have other businesses. We do have to share your data, though, with the credit bureaus. So I think what the intent of this language was for is so that we can share your data with the relevant parties for the mortgage transaction, like the credit bureaus, to be able to get your credit score back. And that's just something we have to do.
Yeah. Who is servicing the loans?
It's all up to whoever we are selling the loans to. So,
okay. So there still are a group of aggregators or servicers behind the scenes that still want these MSRs. Right? Because ultimately, I mean, you are selling off whole loans, and those whole loans will be packaged, securitized, turned into an MSR, and then someone's going to have to service them.
That's correct.
But it's not the same servicer every time.
Yeah, but in many cases, because we are selling the loans directly to the folks who are securitizing versus middlemen, the servicer remains the same throughout the lifetime of the relationship, because the way a securitization works is you have to earmark who that servicer is, and so it's more consistent.
Yeah, the consumer needs someone to send their check to, and somebody to balance their escrows, and somebody to send them the late notice, and right, like someone has to be fulfilling that functionality. My guess would be a lot Citi, just from the research I did, knowing that you all have some Citi backing.
Yeah. Probably not a secret at this point that Citi is a pretty close partner of ours, though they're not the only partner, and you'll hear more from us soon on that. So there's a dynamic base of big capital markets players who buy loans on the platform, and Citi is an integral partner that we really value.
Nice. I'll tell you all this, and I was telling this to Trent and Brett before we started rolling the cameras. I retired from production in November 2025. And I retired. I retired to go all in on all things TLOP, right? Like, I can't change the future or shape the future of mortgage lending while also running production. Like, I tried it. I would have fist fought people if they told me I couldn't do them both at the same time. I later learned I couldn't. So if I really want to do what I want to do, which is coach, consult, create content, give career advice, I had to go all in. However, I'd be fooling you and lying to myself if I said I don't lay in bed thinking about, if I were to re-enter, what would it look like, right? And I know exactly what it would look like. I I mean, 100%. I would still have my partners I have now, right? I would probably need Mark running TLOP, right? The way that Mark runs TLOP. I grab Steven because I need finance and I need strategy. I grab Mike because I need marketing and web dev. I grab myself and I grab one other person who can bring $200 million in production. And I would grab Pylon. I would. It would be my business model moving forward. And I understand, just like with Waymo, I might not be able to do state bond loans right now. Just like Waymo, when I give that example, wasn't able to do all the things that Waymo can do today, they couldn't do 3 and 5 years ago. I'm okay with that. I'm okay if I can't do construction lending. I'm okay if I can't do HELOCs, right? Because what I do know is that, 80% of every loan being originated tends to be conventional FHA, VA, jumbo. And I actually coach this. I don't even know if you know this. I coach loan officers. You only need 5 products to make $1 million a year. 5. Conventional, FHA, VA, jumbo, and I literally say on the 5th, pick your favorite. Whether it's non-QM, let's say it's DSCR or bank statement. Maybe it's construction lending. Maybe it's a reverse mortgage, right? But maybe it's the down payment assistance being done by the state, right? But that 5th loan can be interchangeable by a dozen or 2. But those four never, they never change. So if I'm going to re-enter back in the mortgage industry, I'm going to tell you straight up, that's what I would do. However, Trent said something to me. He said, yeah, but you're an entrepreneur, right? So you look at your ideal avatar and your concern would be, there's a lot of great younger mortgage originators out there, and their companies might not be ready to jump on the Pylon train. Your concern is, but are these people ready to be entrepreneurs? What I throw out there is, if you think you're ready to be an entrepreneur, call me. I will spend 10 or 15 minutes with anybody. Think about this, guys. We do this with our borrowers. I did it for 20 years with borrowers. I've talked to every borrower, whether they used me or not. I talked to every borrower, whether they qualified or not. So why shouldn't I, Dustin Owen TLOP, be willing to talk to you for 10 or 15 minutes about your career, especially if you're trying to embody what it means to be a part of the future of mortgage lending. So I invite you to do this. You didn't know I was going to do this, but first name Dustin, last name Owen on LinkedIn. Literally, I double dog dare you to reach out to me and have me not reply to you within 24 business hours. It just doesn't happen. So look me up on LinkedIn, Dustin Owen. You can follow me on Instagram at the Loan Officer Podcast. I'm really accessible there, but please know I check it and my team checks it. So it's not as a direct when you go to LinkedIn. And my email address is do@tloponline.com. You can also email me. I'm pretty accessible on email, but that's how I would do it. Like literally, if I'm re-entering into the mortgage industry, I'm giving you guys a call first. Last question.
Let me know when you're ready.
Okay. I'm not ready yet because I need to continue to give TLOP my all.
Yeah.
Unless you want to buy TLOP, that's a whole other story. You want to buy TLOP, you may have me way earlier, but then you have me for a whole different reason. Until then, I need to go all in and continue down this path. But just like you said, 2 months to 24 months, somewhere in between.
Yeah.
You never know what's going to happen between 2 and 24 months from now, right? But no, I want you to end on this, unless you have something that we needed to say. I want you to speak directly to the loan officers. This is a question that I asked you 6 months ago when you and I first met over a Zoom call.
If you're a licensed originator who's closing loans, but you're not consistent, this is for you. If you're brand new or just looking for motivation, trust me, this is not for you. Most LOs don't need more information. They need structure. They need proven processes and somebody to hold them accountable. TLOP's Originator Coaching gives you weekly live coaching, scripts top producers actually use, and step-by-step business systems you can implement immediately. Not someday, we're talking day one. You're not watching videos alone. You're executing in real time with other originators who take this seriously. Right now, you can try it free for 2 weeks. That's 2 full weeks for free. You'll sit in on live coaching calls. You'll get access to the frameworks and see exactly how top producers run their business. If it creates clarity, if it creates momentum, or even if it puts wins on the board, you keep going. If it doesn't, no worries, you can cancel. No pressure at all. Click the link, start the 2-week trial, And finally, build this like a business, not a side hustle.
If you are a mortgage loan officer, are you worried about your career moving forward?
I think I would only be worried if I was not pushing the bounds of the new technology that's coming out and figuring out how to use it to my advantage. What I was saying earlier is that we designed Pylon for builders. Like, we invite everybody to come build on our rails. And builders could be everyone from, again, a Fortune 500 company building, a custom product that they ship to their thousands, hundreds of thousands, millions of users, or it could be a mortgage broker or a loan officer building tools to make them more efficient. And what we've seen is this massive proliferation across our customer base of people building things. And it could be a very simple tool that you've just always wanted to have, maybe to explain to borrowers which rate they should choose, all the way to replacing some of the big software tools that you pay for today that aren't really designed for how you operate, and you've just kind of put up with it for a while. If I'm a loan officer today, I'm thinking about how I go 10x my business as a result of the new software capabilities. And to that extent, I wouldn't be worried about myself. I would be worried about my competition. Because again, I have these unfair advantages that other people don't have in the market. So I think you're just like seeing this wise split. You can either view this as an opportunity, or you can get scared and shrivel up because the world is changing. I think the people probably had similar questions during the Industrial Revolution. People probably had similar questions when the internet came to be in the 90s and into the 2000s. This just happens to be one of probably the most exponential technology that we've experienced.
But is there ever a world where the consumer doesn't need or want a human involved in their home buying process?
Well, potentially, but I still think like everything that we're seeing is saying that that's the last thing to happen. So
I love that. That's the last thing to happen.
Yeah, last thing to happen. Like, we have customers who certainly have tried to roll out self-serve experiences, and they all quickly say, "Man, we really need someone to be able to take to pick up the phone and answer the questions and get borrowers comfortable, because this is a big decision that they're making." I think like that's where I'm actually most bearish anytime soon is those people going away. It's more so, how do you get rid of the mundane work that prevents people from making more loans?
So Trent, let me know, if people want to learn more about Pylon Lending, where should they go? What should they do?
Yeah, so you can go to pylonlending.com/partners, and there you can see a list of some of the originators that are on Pylon today, and you can request an introduction. We will put you in touch. Alternatively, if you are wanting your company to get onto Pylon, you can send an introduction to your leadership team, and we'd be happy to explore whether or not it's a good fit. And we're seeing that happen a lot right now.
What if I'm a company owner though? Like, what if I'm one of these Fortune 500 companies and I just want to have access to your rails, or I'm running a $3 billion IMB and I want to learn more about how I move everything over to Pylon?
Oh, well, that's the really easy, obvious way to get in touch with us. So if you go to our website, there are multiple ways to get in touch on that front. It's just actually been more, it's been more difficult for individual loan officers to get in touch with us historically. So that's why I wanted to answer that. But you're welcome to also reach out to anyone on our team, and we'd be happy to help.
Yeah, I think it's good to know, and for the whole audience to know, and I think it's where you're going with the trend is, look, this product is for the entire industry.
Yes.
Like it's for people who aren't even in the industry, but they're wanting to enter the industry. You are a tech company revolutionizing mortgage. However, a lot of your feedback has been individual originators wanting access to Pylon. And you're like, look, I can't onboard an individual originator. So I either need you to do one of two things. I need you to put me in contact with the men and women in charge of running your company.
Yep.
And let's see if they want to come on board. Or I need you to go work for one of the lenders or the originators that we already have onboarded,
Yep.
at which point you can have access to Pylon. So there's really 3 ways you can have access to Pylon. If you are that company already, just go to pylonlending.com and reach out for more information. They would love to have a discovery call with you. If you are an originator, then these are your 2 ways. You can either push up to the chain of command and ask them to reach out to Pylon Lending, or you have to go to their website, which is the /partners, and you can see who already is partnered with Pylon, and you could consider potentially aligning with that company if you truly want access to Pylon Lending.
Yeah, and just for the record, we purely do that as an affordance or service to loan officers wanting to come on board. We don't have any interest either way. So to the extent that you want to get your team onto Pylon in any way, we'd love to help out.
Perfect. I do want to ask you this. I tend to ask this question pretty often. What's one of the favorite books you've ever read? Speaking and thinking more as a business operator, entrepreneur.
Well, football has come up a few times. There's a book by a guy named Bill Walsh.
Yeah.
You know that? Yeah.
Yep, San Francisco 49ers.
That's right. And he wrote a book called The Score Takes Care of Itself. I think the general premise is, again, what I said earlier, maybe it was on the other episode we did, is how do you maniacally focus on the inputs and ultimately the outputs sort of follow. And so people who are really excellent at what they do and they obsess over every piece or every sort of inch of surface area, those are the people who ultimately build great things. So,
and last question, you're a dad of 4. What is some information that you're raising your kids and making sure that they have it? It's like worldly advice, it's mentorship advice, and you make sure they have it because maybe you growing up didn't receive it.
Oh, man.
And maybe you did receive it and it was so good that you're like, you know what? I'm so grateful that my parents instilled this in me, so I'm going to make sure my kids get it. Or it could you go the opposite direction, which is whether it was high school or whether it was in childhood, I wished someone would have slowed me down and given me this piece of information.
Well, in a slightly different direction, going back to what does AI mean for loan officers and originators, the thing that technology seems bad at is relationships and sales. Like, I actually think there's going to be way more value placed on people who are good at that than there will be people who can compare 2 documents and tell you whether or not there's an anomaly. And so growing up as a kid, my parents would always force me when we went to the grocery store or anywhere to go up and talk to the person and ask where something was. And they knew well where that thing was in the store, but they were just forcing me to sort of get out of my shell. Now, I was kind of a nerd and, technical. And so like, it makes sense that they maybe that is not necessary for everybody, but I think that's the thing that I would be thinking about. That's the thing that I'm thinking about for our kids is they're growing up in Palo Alto where, it's an incredibly competitive environment. Everyone wants to get into Stanford and these sorts of things. I want them to be functional members of society who people can understand and follow and do business with.
I love that piece of advice because I couldn't agree more. Right? It's like he or she that can win in relationships, that can communicate the most effectively, tend to be those that also can lead, tend to be those that are followed, and can go further in general. But we don't put an emphasis on it the way we should, especially growing up in the screen age that we did, where most of us are used to thumbing through relationships, swiping through relationships, or we were too nervous to lift our head up from the screen we were looking at to see someone in the eyes, to smile, read body language, and more importantly, make a solid impression. So I freaking love that coming from you specifically too, based age, what you do for a living, what you've accomplished. That may be one of my most favorite pieces of advice I've heard at all in 2026 from a guest. So thank you, Trent. Any other words that we need to share with the audience before we conclude? Say our goodbyes, sound off?
I think that's it.
Sweet. Hey, y'all, thank you so much for tuning in. If you tuned in for the first time, thank you so much. I don't know if you're listening on Spotify or Apple. Make sure you give us a 5-star review. And if you haven't gone to the YouTube channel, subscribe. Make sure you do that too. Oh, by the way, we are taking over the Caribbean. If you're a mortgage lender and you want to go on the coolest mortgage event ever, I invite you to go to our website, tloponline.com. The event is called Unite. It's the TLOP Unite Caribbean Takeover event. It happens in September. This is your personal invite to come join me, my team, and 150 other mortgage professionals in September for a week of networking, masterminding, and just having a great time. It's the United event. Go to our website, TLOP Online, for more information. He's Trent Hedge with Pylon Lending. I'm Dustin Owen with the Loan Officer Podcast. That is all the time we have for you today, but we do look forward to catching you on the next episode. Peace.